Good morning. Today, let's discuss the Advisory and Arranger license from the DIFC. Colloquially known as the Category 4 Advisory License, this is the entry point for aspiring firms to start offering financial services from the center. DIFC is one of the world's top 10 onshore financial centers and offers a secure and efficient platform for businesses and financial institutions to reach into and out of the emerging markets of the region. The quality and independence of DIFC's regulator, the prevailing common law framework, excellent infrastructure, and tax efficiencies make it the perfect base to take advantage of the rapidly growing demand for financial and business services in the MENASA region. DIFC fills the time zone gap for a global financial center between the leading financial centers of London and New York in the west and Hong Kong and Tokyo in the east. So, why set up a financial services firm in the DIFC? The DIFC is a leading financial hub in the region. Besides offering a wide range of financial service activities, the center also provides an integrated environment and world-class standard of living. It is well regarded in the international community as well. There exist opportunities for startups as well. The recent focus on fintech led to the DIFC Innovation Hub initiative that serves as an accelerator for fintech firms to test their products and pitch it to prospective investors. Firms interested in carrying out investment advisory activities from the DIFC are required to submit applications to the Dubai Financial Services Authority, or DFSA. The DFSA, for the purposes of authorization and supervision, categorizes investment advisory, credit advisory, and insurance advisory activities under Category 4. Other activities that come under a Category 4 license include operating an alternate trading system, for trading of unlisted securities including security tokens, and crowdfunding. While the Category 4 license allows firms to deal with professional clients only, it is possible to seek a retail endorsement during or after the licensing process. The endorsement attracts a one-time fee of $20,000 at the time of application. Activities: arranging deals and investments, arranging credit and advising on credit, advising on financial products, arranging custody, insurance intermediation, insurance management, operating an ATS, providing fund administration, providing trust services, operating a crowdfunding platform, arranging or advising on money services. Advisory activities are non-discretionary in nature and can include arranging deals and investments. Arranging deals and investments means making arrangements with a view to another person buying, selling, subscribing for or underwriting an investment, whether that other person is acting as principal or agent. Advising on financial products. Advising on financial products means giving advice to a person in his capacity as an investor or potential investor, or in his capacity as agent for an investor or a potential investor, on the merits of his buying, selling, holding, subscribing for or underwriting a particular financial product, whether as principal or agent. Arranging credit and advising on credit. Arranging credit and advising on credit means A. Making arrangements for another person, whether as principal or agent, to borrow money by way of a credit facility, or B. Giving advice to a person in his capacity as a borrower or potential borrower or as agent for a borrower or potential borrower on the merits of his entering into a particular credit facility. Arranging custody means arranging custody for one or more firms or individuals. Activities include A. Negotiating and settling terms of the contract between the custody provider and the client who is obtaining that service. B. Assisting the client to complete application forms and other processes. C. Collecting and processing the client's payments, and D. Transmitting information, including instructions from the client and confirmations by the custody provider, between the customer and the custody provider. Let's now speak of the mandatory appointments and staffing required for a Cat 4 firm. The DFSA expects that the firm be adequately staffed depending on the scale, scope, and nature of the product portfolio that is proposed to be offered from the DIFC. At a minimum, the DFSA would like to see the following appointments. Board of Directors, a well-organized board with robust governance policies. The chair would have to be a non-executive director. Senior Executive Officer, SEO, senior banking professional with over 10 years of experience, ordinarily resident in the UAE. The Senior Executive Officer, SEO, is responsible for the day-to-day management, supervision, and control of the firm's business activities. An SEO is expected to perform with the highest standards of skills and due diligence and take reasonable care to ensure that the firm's business is organized, managed, and controlled effectively. The SEO is also responsible to establish and maintain arrangements to provide relevant, accurate, comprehensive, timely, and reliable information to firm's board and senior management, which is necessary to organize, monitor, and control its activities, to comply with legislation applicable in the DIFC, and to manage risks. Finance Officer, FO, senior and suitably qualified finance professional. In case of a group, the FO can be from the parent company and does not have to be resident in the UAE. This role can also be outsourced. You would also have to provision for a suitably qualified accountant/bookkeeper. The FO contributes in making the best use of the overall corporate strategy of the company, complemented by strategic planning to determine the overall aim of the firm's business. This involves the financial status assessment, risk assessment and mitigation, understanding the firm's weaknesses and strengths, and the use of analytical models to gain insights to the current financial position and opportunities for future growth. Risk Officer, this position is usually outsourced and not mandatory. Compliance Officer, CO, senior compliance professional with over 10 years of experience, ordinarily resident in the UAE. Money Laundering Reporting Officer, senior AML professional with over 10 years of experience, ordinarily resident in the UAE. This function can be combined with compliance, and one individual can carry out both responsibilities. So, what are the capital requirements for a firm in the DIFC? The base capital is $30,000. Also, the base capital for operating a crowdfunding platform, alternate trading system, or money transmission services is $140,000. Actual capital required will depend on the nature, quantum of business, and forecasted annual expenditure, as per the financial model of the proposed firm. Actually, there are three components of capital: base capital, risk-based capital, and expense-based capital. The higher of the three is set to be the capital requirement. These figures are calculated using the financial models that we make for the regulatory business plan during the application process, and so are mostly unique to the company that applies for the license. The expense-based capital minimum for a Category 4 firm, except in the case where client monies are held, is 6/52 of the projected annual expenses of the firm, unless in the case of lower prudential risk firms. Calculation of capital is a detailed process and involves many factors. We recommend that you contact us for more details on the application process and capital calculations. What are lower prudential risk firms? A firm is a lower prudential risk firm if it meets all of the following conditions. A. It is in Category 4. B. Its license authorizes it to carry on only one or more of the following financial services. I. Arranging deals and investments. 2. Advising on financial products. 3. Arranging custody. 4. Insurance intermediation. V. Insurance management. 6. Arranging credit and advising on credit, or 7. Arranging or advising on money services, and C. It does not hold insurance monies. Lower prudential risk firms are a subcategory of Category 4 firms. Such firms receive concessions from certain detailed prudential requirements, such as not being required to maintain capital to meet the expenditure-based capital minimum requirements. Having said that, lower prudential risk firms are still required to meet other PIB requirements and other general prudential requirements, such as maintaining adequate capital resources and ensuring that it maintains capital and liquid assets which are adequate in relation to the nature, size, and complexity of its business, to ensure that there is no significant risk that liabilities cannot be met as they fall due. These liabilities may be contingent and prospective liabilities, such as those arising from changes in business activities or claims made against the firm. Now, onto a question that we get asked very often. Can DIFC firms service clients outside the center and in the greater UAE? Yes, they can. Sheikh Mohammed bin Rashid Al Maktoum issued Law No. 5 of 2021 relating to the DIFC, which brought further clarity to the rules governing the promotion and supply of services and products for firms registered in the center. The revised law confirms that DIFC-registered entities can supply services and products outside the DIFC, as long as they are primarily provided out of the firm's premises in the DIFC area. Marketing and promotional activities are also allowed outside the center. There may be additional rules to follow, for instance, when actively marketing funds from the DIFC. A passporting regime exists in this case, where the fund manager can register for a passport for the fund to be marketed in the UAE and the ADGM. Do get in touch for more information on this. Okay, so what is DIFC's position on virtual assets? The DFSA made the relevant amendments to its legislation recently, thus creating the framework for the regulation of security tokens in the center. Any licensed firm that wishes to advise, arrange, or manage crypto assets will have to apply for additional endorsements to their licenses. Now, onto the application process. The DIFC application process commences with formal introductions to the DIFC and the DFSA. Following the introductory call, a detailed regulatory business plan, RBP, is prepared, along with financial projections, for a quick review by the regulator. The comments of the regulator are incorporated into the RBP, and a comprehensive application is compiled, comprising policies, processes, and other related documentation. The KYC and associated forms of all key individuals are also prepared for submissions. The formal application is then sent across to the DFSA, who reviews the pack over a period of 7 to 10 business days, and then accepts it. The detailed review process then commences, and this can take anywhere between 60 and 90 days to complete. The regulator maintains communication with the applicant at all times during the review, reverting with an initial review 2 weeks into the application, and then follow-up reviews thereafter. The DFSA also meets with the SEO, FO, and CO/MLRO designates, and conducts a detailed interview with them. An in-principle approval is issued in case the application is successful. The applicant then proceeds to satisfy the in-principle conditions, and this involves the setting up of a legal structure, opening a bank account, and depositing the share capital in the account. Other tasks include finalization of auditors and obtaining professional indemnity insurance for the firm. Once done, a final submission is made to the DFSA, following which the regulator issues the financial service permissions and the process is then complete. The firm is now open for business. Sounds great. What does all this cost? The DFSA is responsible for reviewing and approving all applications for financial services. Costs depend on the activities applied for, which puts the applicant in one of 5 categories. Generally, there are 2 components of DFSA fees. One, an application processing fee, and the other, an annual licensing fee. Application fee, $15,000 for a Category 4 license application. License fee, $15,000 for Category 4 license. Retail endorsement, one-time fee of $15,000. The ROC helps to set up the legal structure of the DIFC regulated firm. Shareholders can be individual or corporate. There are many options available, such as private company limited by shares and limited liability partnerships. In case of private company limited by shares, the costs for setting up include application for reserving a name, 2 working days $800. Application for incorporation of a private company limited by shares, 5 working days $8,000. Commercial license on incorporation, 5 working days $12,000, annual fee. A bit on data protection. The data protection notification is part of the process of registering a new entity in the DIFC. The costs involved are as follows. Registration, $1,250. Annual renewal, $500. Every entity registered in the DIFC is required to lease a physical office. You can choose from the gate and surrounding buildings, or other buildings within the DIFC, such as Emirates Financial Towers, Central Park, Park Avenue, Burj Damon, and Currency House. Prices vary, depending on the space availed and the building. Here is an indication of the prevailing rates. DIFC Business Center, from a 2-desk office at $35,000. DIFC fitted offices, from $55 per square foot. Other buildings, from $45,000 per annum. How can 10 Leaves help me? We provide turnkey services for applications in the DIFC. From initial consulting to assistance in authorizations, to assistance in preparation of the legal documentation, 10 Leaves helps you navigate the DFSA rulebook and submit an application that is comprehensive, complete and compliant. Our services include assistance in reviewing the business model and advice on the applicable regulatory framework, preparation of the regulatory business plan and comprehensive financial projections, preparation of all policies, processes, and manuals required, provision of outsourced compliance officer and outsourced finance officer services, provision of VAT and corporate tax consultation services, finalizing the legal structure, including holding company setup and customization of memorandums, and finalization of leased space, bank account opening and obtaining financial services permissions. A lot of our Category 4 clients are startups, where experienced investment bankers set up their own shop. In these cases, we also assist such teams with corporate and commercial documentation through our legal consultancy, 10 Leaves Legability. We assist in the drafting of founder agreements, shareholder agreements, investor agreements, share vesting/ESOP plans, client, supplier, distributor agreements, employment agreements. We also provide services in Luxembourg, Saudi Arabia, and Mauritius. Well, we covered a lot of ground today. That's it for now, but stay tuned for more information on doing business in the DIFC. Have a good day.